Welcome to the Deep Dive. We're your shortcut to getting genuinely well-informed, pulling out the really important nuggets from, well, often a big stack of sources. Today, we're diving headfirst into a sector that, honestly, touches all our lives, whether we realize it day to day or not. Animal health. I mean, think about the care we give our pets at home, or the huge global livestock industry that, keeps food on our tables. Keeping animals healthy is this massive, multi-billion-dollar thing. And when you talk about leaders, innovators in this space, Zoetis Inc., that name comes up constantly. They've got, over 70 years of history, known all over the world for their medicines, vaccines, diagnostics, the whole range for animals. So our mission today, we're taking their latest Q2 2025 financial reports. That means the official Form 10Q filing, the press release, and we're going to cut through all that dense info. We want to pull out the most important insights, maybe even some surprising facts, just for you.
Exactly. And this isn't just about, reading out numbers. This deep dive is really a chance to understand not just what happened in Zoetis's latest quarter, but maybe more importantly, why it happened. Why do these movements matter for the whole animal health sector? And maybe even how do they link to some of the bigger economic trends we're all keeping an eye on?
Okay, great. With that sort of overall picture set, let's dig into the specifics. Zoetis's Q2 performance, just looking at the top line, they definitely put up some pretty robust numbers.
Oh, absolutely. If you look at the main reported figures, revenue for Q2 2025, that came in at $2.460 billion, which is, 4% increase over the same quarter in 2024. And their net income, that hit $718 million. That's up a pretty solid 15%.
Those headline numbers, they sound strong.
Right.
But you always see these other figures in financial reports, right? The adjusted numbers or organic operational results. For someone trying to really get what's going on underneath, how much more useful are those figures? What do they tell us that the basic numbers might, hide a bit?
That's a really crucial point. So the adjusted net income, that basically smooths out certain one-off costs or things not related to the core business to give a clearer view of ongoing operations, that was $783 million. And that's up 10%. But I think the real story, especially for a global company like Zoetis, is often in that organic operational growth. What that metric does is it strategically strips out the effects of, say, fluctuating foreign currency exchange rates and also certain acquisitions or divestitures. So it gives you a much cleaner look at how the core business itself is actually performing. And for Q2 2025, that organic operational growth, it showed an even stronger 8% increase in revenue and a 10% increase in adjusted net income.
All right, so for you listening, the takeaway isn't just that first revenue number you hear. It's understanding that Zoetis's true underlying momentum seems actually stronger than those initial figures might suggest because of how they track that core business separately.
Precisely. And if we break down what drove that operational growth, roughly 4% of it came from price increases across their products, strategic pricing. Another 3% came from their key franchises performing really well, those big flagship product lines. And then about 2% from their other sort of standard inline products. It is worth mentioning, though, that foreign exchange was a slight drag. It negatively impacted that reported revenue growth by about 1% in Q2. So the organic number corrects for that.
Okay, that makes sense. Now, to really understand these results, we probably need to split things up, right?
Yeah.
Look at Zoetis's two main business pillars: companion animals, dogs, cats, and then livestock, cattle, pigs, poultry, fish. And I think, as you hinted, the story's kind of different depending on which side you look at this quarter.
Indeed, quite different. On the companion animal side, performance was, exceptionally strong. Overall operational revenue growth globally was 8%. If you look just at the U.S. segment, that was 9% operational growth. And that was largely driven by higher sales of products like Simparica Trio, that's their big flea, tick, heartworm combo product, very well known. Also, their key dermatology products, Apoquel and Cytopoint, were big contributors. And small animal vaccines, too. There was a slight offset in the U.S., though. Sales were a bit lower for their monoclonal antibody products. These are the really innovative treatments for osteoarthritis pain, Librela for dogs, Solensia for cats, just slightly lower in the U.S. this quarter. But internationally, companion animal growth was also really robust, 8% operationally. Again, driven by those same dermatology products, the Simparica franchise, and actually Librela and Solensia did very well internationally.
Okay, so companion animals, strong story. What about livestock then? The initial numbers look like a decline.
Right. So when you look at the reported numbers for livestock, it looks like a drop. Down 8% globally, down 21% in the U.S., down 2% internationally on that reported basis. But, and this is really crucial to understand, this reported decline was almost entirely due to a strategic decision they made. Back in October 2024, they sold off their medicated feed additive portfolio, the MFA business, and related assets. And that divestiture alone, just selling that piece, accounts for about a 4% volume decrease in their total company operational revenue growth. So it really hit the livestock number specifically.
Ah, okay. So
Yeah.
that's a huge piece of context.
It really is. Because here's the key thing for livestock. If you exclude the impact of selling off that MFA business, livestock operational revenue actually increased across the different species. For example, fish products grew, mainly driven by strong vaccine sales in places like Norway and Chile. Swine products also grew. That was partly due to timing and maybe some better market conditions, particularly in China, maybe disease recovery, better supply-demand balance, things like that. Poultry products saw higher demand for vaccines, plus some price increases helped. And cattle products grew too, mostly due to price. So overall, international operational livestock revenue actually grew a significant 10% when you adjust for that divestiture.
Wow, okay. That's fascinating, isn't it? How one single strategic move selling off that MFA business can just completely reshape the reported numbers, even when, like you said, the underlying story and the rest of the livestock business was actually pretty strong in places.
Exactly.
It really hammers home why you need to look beyond just the headline figures and understand those organic operational numbers, especially when there are big portfolio changes.
And it wasn't just a numbers game, right? That divestiture suggests Zoetis is actively refining its focus, moving away from perhaps lower margin feed additives towards more innovative areas. It's strategic.
Right, a deliberate shift. Okay, so that covers the recent performance. But, quarterly figures only tell you so much. A company's long-term health really depends on what's coming next.
Yeah.
What's Zoetis got cooking in its innovation pipeline? What's driving their future outlook?
Yeah, their commitment to R&D and innovation is definitely a core part of their story. They actually stated they expect a significant approval in a major market every year for the next several years. That's quite a statement. It really speaks to how robust they feel their pipeline is and their confidence in bringing new things to market consistently.
Any recent examples of that, things that just came through?
Yeah, absolutely. We saw some interesting ones just recently mentioned in the report. For instance, Simparica Trio, that companion animal product, it got new label indications in Japan. Now it can prevent eyeworms and also flea tapeworm infections. Apparently, it's the only combo product there indicated to prevent flea tapeworm at the source by killing the fleas carrying it. So that's a nice competitive edge in a key market. Then there's Revolution Plus, that's a topical for cats. It got approval in Australia for treating nodoitis mange and in the EU for preventing flea tapeworm infections. And Silencia, the cat OA pain drug, just got approved in South Korea, so expanding geographic reach too.
Okay, so good progress on the pet side. Anything notable for livestock innovation recently?
Definitely. Something quite relevant right now. They received a conditional license in the U.S. for their avian influenza vaccine. It's the H5N2 subtype, killed virus vaccine, specifically for use in lactating dairy cattle.
Oh, wow. Yeah, given all the concerns about H5N1 and dairy herds, that seems very timely.
Exactly. And on the swine side, they got new label claims and also approvals for needle-free administration for some key vaccines like Foster Gold and Suvaxyn PRRS. That was in Brazil, Australia, and the EU. Needle-free is a big deal for producers, ease of use, animal welfare, compliance.
So these continuous innovations, these approvals, they must be feeding into the company's confidence about the future, right?
Absolutely. And you see that confidence reflected very clearly in their financial guidance for the full year 2025. They actually raised their guidance as of August 5th. They're now expecting revenue between $9.450 billion and $9.600 billion. And importantly, that translates to organic operational growth of 6.5% to 8.0%. Adjusted net income is now projected between $2.825 billion and $2.875 billion, showing organic operational growth of 5.5% to 7.5%. And the adjusted diluted earnings per share, the EPS number, is now guided between $6.30 and $6.40.
Then why the raise? Just strong performance so far.
Pretty much. They attributed it mainly to their strong first half performance, which we've been discussing, but also coupled with disciplined execution, basically managing the business well and effective cost management.
Okay, that makes sense. So we've talked sales, we've talked innovation, but, beyond the products in the pipeline, a company's real strength often comes down to the financial foundations, how it manages its money, its operations, the less glamorous stuff, maybe.
Well, less glamorous perhaps, but absolutely critical for any investor or just anyone trying to understand the company's stability and strategy. And Zoetis looks pretty solid here. In terms of liquidity, they reported $1.435 billion in cash and cash equivalents at the end of June 2025. What's also quite notable is they have a $1.0 billion revolving credit facility, basically a line of credit they can tap into if needed, and it remains completely undrawn.
So they have cash on hand plus easy access to more if they need it. Flexibility.
Exactly. Significant financial flexibility. Now, looking at their debt, they do have about $1.35 billion in long-term debt coming due within the year in 2025. Total long-term debt stands at about $5.2 billion. But again, that strong cash position and the undrawn credit line gives them plenty of room to manage these obligations or fund future investments.
And what about returning value to shareholders? Anything happening there?
Yep, they're active on that front too. They have a multi-year share repurchase program. It was authorized back in August 2024 for up to $6 billion. As of the end of June this year, there was still $4.9 billion remaining under that authorization. So that shows a clear, ongoing commitment to buying back shares and returning value to their shareholders, which is always a positive signal investors tend to look for.
Okay. And digging maybe a little deeper into operations, what about costs? Anything interesting happening with their expenses? Or any potential legal or tax things we should be aware of?
Yeah, a few points there. On the expense side, their cost of sales as a percentage of revenue actually decreased slightly. That was helped by selling the lower margin MFA business we talked about, also some favorable foreign exchange effects and those price increases. Though they did note that underlying manufacturing costs were actually a bit unfavorable. Their SG&A expenses, selling, general, and administrative, those did increase. That was driven by more spending on advertising and promotion, higher compensation costs, and also investments in things like information technology, so investing in growth and infrastructure. Research and development spending, the R&D line, stayed relatively stable as a percentage of revenue, which seems about right for a company that relies so heavily on innovation. You want to see that sustained investment.
Makes sense. And the legal or tax side, anything significant?
Well, there are a couple of things mentioned. They are currently under an IRS audit for the 2017 and 2018 tax years. The IRS has proposed an additional tax bill of about $450 million for 2018. Zoetis stated in the filing that they disagree with this and they intend to defend their position. So that's an ongoing matter. Also worth noting, there was a new U.S. tax legislation enacted quite recently on July 4th, 2025. The report refers to it as the One Big Beautiful Bill Act. Zoetis mentioned they're still evaluating how the provisions in that new act will impact their financial statements. So that's another area to kind of watch going forward.
Okay, so a tax situation they're contesting and new legislation they're still analyzing. Standard stuff for a big multinational, I suppose.
Okay, pretty much. And one other minor point on the corporate governance side, they recently amended their Executive Severance Plan. This was on July 31st, 2025. It basically adjusted the severance benefits for the CEO and other senior execs under certain conditions, like termination without cause or after a change of control. It defines things like how many months of salary they'd receive, health benefits continuation, etc. It's a fairly standard kind of corporate governance update defining executive compensation structures.
Got it. So putting all these pieces together, it really paints a picture, doesn't it? A company that's, yes, growing, especially in pets, innovating, but also actively managing its portfolio, like with that divestiture, managing its finances carefully, balancing investments with shareholder returns, and navigating this always complex background of regulations and taxes.
Exactly. It's easy to just grab the headline revenue number, but when you dig into the details like this, you see all the different levers they're pulling and the challenges they're managing. It gives you a much richer understanding.
Okay, so let's try to wrap this up. To recap our deep dive into Zoetis' Q2 2025 report, we saw a company delivering a pretty robust performance overall that was really driven by strong growth in companion animals and also by some smart strategic portfolio management, especially navigating that big MFA divestiture while still showing underlying growth in other livestock areas. And their confidence seems pretty high, looking at that strong innovation pipeline and the fact that they raised their financial guidance for the full year.
Yeah, I think that's a good summary. And hopefully for you listening, digging into these kinds of details helps you get a more, nuanced and informed view than just reading the headlines. It's about seeing those underlying currents, the strategic choices being made within a really major industry player.
Absolutely. So maybe a final thought to leave you with. As this whole world of animal health keeps changing so fast, what do you think? What kinds of innovative solutions, maybe in pet care, maybe in livestock management, what do you think might pop up as the next really big disruptors, and how can they reshape this entire industry even further? Something to chew on.